All right, let's get right into it. Today we're looking at a technical report that is a real head-scratcher. It's about one company, Rubico Inc., and it's basically telling two completely different stories at the exact same time.
And this is why we're talking about it. In just one day, the stock shot up by nearly 40%. I mean, a move that dramatic, you just have to stop and ask, what on earth is going on here?
And that really brings us to the big question, doesn't it? Is this incredible high-volume surge the start of a real comeback? Or is it what traders call a bull trap, a nasty fake-out that looks good, sucks you in, and then the bottom falls out again? The data, believe it or not, points in both directions.
So first, let's put on our skeptical hat. We're going to look at the case for the bears, the argument that says this stock is still in some serious long-term trouble. And you'll see the weight of its recent past is, well, it's pretty heavy.
Just look at this table. You can see this huge gap between the current price and its moving averages. Think of those averages as the stock's center of gravity over the last month or two. Being this far below them isn't just a small dip. For a technical analyst, this is a classic, powerful signal that the underlying trend is very, very negative.
And it really doesn't stop there. It's like all the warning lights on the dashboard are flashing red. Look at that Aeron oscillator, for instance. It's designed to tell you how strong a trend is. It's sitting at nearly negative 93. That's not just a weak trend. That's a screaming signal that the downtrend is still in full command. The message from all these tools is pretty clear. The downward momentum is just incredibly powerful.
Okay, but just when you think the case is closed and this thing is headed for zero, the report throws a massive curveball. So let's flip the script and look at the other side of the coin. There's some compelling data that suggests this recent price explosion might be a lot more than just a random fluke.
And this is where the story gets really juicy. It all comes down to volume. How many shares are actually changing hands? The data tells two completely different stories. Over the long term, it looks like the big money has been quietly selling off their shares. But a short-term indicator just started flashing positive, signaling a very recent, very intense rush of buying.
And how intense was that rush? Get this, the trading volume on that big day was over 31 times its daily average. That is not normal. That's a massive, undeniable surge of interest that shows a dramatic, almost violent shift in short-term sentiment.
Now, to understand why the bulls are getting so excited, you have to understand this one key idea: oversold. It's simple, really. Think of a rubber band. If you stretch it too far, and I mean way too far in one direction, what's it going to do? It's bound to snap back, right? The theory here is that this stock was pushed down so hard, so fast, that a rebound was almost inevitable.
And boy, does the data suggest this rubber band was stretched to its absolute limit. All of these indicators are designed to spot this exact condition. Take the RSI, the Relative Strength Index. Anything below 30 is usually considered oversold. This thing is at 12.69. It's basically on the floor. These numbers are all screaming that the selling was just completely overdone, creating the perfect conditions for a powerful snapback.
So here we are. We've got two compelling arguments, both backed by solid data. One says the long-term trend is a disaster. The other says a major short-term reversal is happening right now. This puts the stock at an incredibly critical pivot point. The next move is everything. At this chart, well, this shows us the battlefield. The report identifies a key support level down at 0.273. That's the floor where buyers might step in. And there's a resistance level at 0.353. That's the ceiling where sellers might take over. And right in the middle, you have the pivot point. With the stock's last price at 0.314, it is sitting literally on that razor's edge. Talk about a tense moment.
Okay, so with the battle line so clearly drawn right at this critical point, the report lays out four distinct paths the stock could take from here. It's the bull versus bear showdown.
So let's walk through these. First, the bullish scenario. The good vibes continue, and the price breaks right through that 0.353 ceiling. Then you have the bearish scenario. The old downtrend wins, and the price falls back toward the floor at 0.273. Third, the sideways move, a stalemate where the stock just bounces between the floor and ceiling. And finally, number 4, the big one, the breakout scenario. This is where another wave of high-volume buying comes in and just launches the stock past resistance, maybe even up towards $0.50.
You know, you couldn't write a better summary of this whole puzzle than the report's own final thought. It perfectly captures the split personality of this stock. It admits, yes, the long-term trend is awful, but it just can't ignore these clear signs of a short-term bottom and the potential for a really significant bounce.
Which brings us right back to the ultimate question. After that shocking 40% jump, is Rubico a coiled spring, just compressed by all that selling and ready to launch higher? Or is it a falling knife, where this bounce was just a brief pause before the next plunge? The data says it could be either one, and the real story is going to be told right here at this critical crossroads.